What's up, everyone? Welcome back to Track the Harmonic. I'm your host, Lord MC, and in today's video, we'll be covering what went on in the market today, especially after Jerome Powell's congressional testimony. But before I get into that, I want to preface by saying I am not a financial advisor. None of the things I say in my videos or anywhere else is ever financial advice, so question everything, do your own research, and come out with your own conclusions. So I'm not going to go into too much detail what went on in the congressional testimony. I'm just going to summarize some key takeaway points that I found very important to note, especially the way the market reacted after comments made by Jerome Powell. So what was those key takeaways? One of the first key takeaways was that he said that the Fed may raise interest rates at a faster pace than previously expected due to strong economic data, which has increased the probability of a half-point hike at the March 21 through 22 meeting. He also mentioned that he emphasized the need to address high inflation and called on Congress to raise the debt ceiling to avoid damage to the global economy. Another key takeaway was when Senator Elizabeth Warren criticized Powell's policies, claiming that the job losses could result from the Fed's efforts to combat inflation. She also made a comment there at the end where she thinks that Jerome Powell's not doing a good job, and if he is not able to do the job, then they can find somebody who can. So very heated there. So I'm also going to be covering the dollar and the bond market as well, because I do think it's very important, especially after the movement it got after the congressional testimony. So we are key critical levels there on in the bond market, and I do believe it's very important to watch, especially after the congressional testimony. So let's get right into that. We're going to cover here SPY here first, and the indices, the dollar, and then the bond market, and then some of the blue chip stocks. So SPY here went as high as 404.67 before closing the day at 398.27. So what can we expect here moving forward harmonically? So SPY does have here a bearish harmonic ABCD pattern where the volume after today's close was significant and it warranted this push down, right? It went below target 1 here at 399.39. Should this continue moving to the downside, we could potentially see a type 1 reaction all the way to target 2 at 387.71. If I bring here my indicators, and I'm going to bring here my drawings, obviously after losing target 1, you're not going to go all the way to target 2 that easily. So what are the next levels of support and resistances for the SPY? So if the SPY continues to push down forward, I do believe the next level of support would be harmonically that 396.13 area. Should you continue pushing down and losing the 396.13, you can potentially come back down to 393.84, in which case you're kind of close to the 200 SMA. Losing the 393.84 support, you will come down potentially to see that 390 and then eventually test that target 2 at 387.71. So what can we look here with the indicators, the harmonic indicators here, is that the RSI is coming down the midline. The HSI here within the harmonic pattern, still not at the midline yet, but should it cross that midline, I do think you could potentially see anywhere over the halfway between 399 and 387, which would be around that 390-ish, 398-ish area here. Call it a 200 SMA. And if it continues further going down to the oversold, you could potentially see it reach that target 2 at 387.71. And RSI did cross the midline, but still too early to tell whether the HSI, which I think is important to see if this is going to actually come down to cross that midline. Should you bounce off of 396.13, you could potentially come back and test that target 1 at 399.39. So, and then for most case, maybe you come back and test the gap fill here at 407, 408, between 407 and 408. So we are still in a downtrend. You're still creating lower lows and lower highs. So it's going to be interesting to see if SPY continues to push up or not, especially after the congressional testimony. There's still the congressional testimony that's going on tomorrow. A lot of data that's coming out this week. So if the market is going to continue pushing, these should be your key levels here harmonically. So 396 for support, 393, and then 390. Yeah, I do believe if you lose 390, you can potentially start to leg down back to 387 and then 370s and on and so forth. But we will take it one step at a time since we are not anywhere close to those ranges yet. So let's jump over to the triple Qs here. The triple Qs did go as high as 301, the low being 295 before closing the day at 296.34. So harmonically here, you have this bearish shark pattern where you triggered an HSI dot here to the upside, and you had a shooting star just like you did back at SPY. With SPY, you had a shooting star and increase in volume to the sell side. So the next level harmonically here, within this harmonic pattern, you have target 1 at 283.97, target 2 at 261. I have a key level support here at 293.26. Should you lose that, you could potentially come back and test 288 and then 283. The volume is increasing to the upside, or this, let's just say, increasing up with selling pressure coming down. So the move to the downside is warranted, and you're almost at the same situation with the harmonics here, HSI and MPRSI, as SPY. So you definitely do not want to lose 293 on the triple Qs, otherwise you can come back down to test 283.97 potentially. Should you find support here at 293.26, you could potentially come back up here to 296, 300, and then 303. After 303, you can maybe see terminal at 313 and then 318. Too early to tell, but it is bearish right now. Same thing with SPY, creating lower highs and lower lows. Lower lows and lower highs. So jumping over to the Dow Jones here. The Dow Jones went as high as 344.92, the low being 328.72 before closing the day just slightly above 328.87. So volumes definitely increased to the sell side after this push up on decreasing volume. So this move, again, warranted. You have this bullish butterfly. I think that we could see something better on the 2-day, if I'm not mistaken. 2-day or 3-day. We look at the 3-day here. It's almost essentially the same thing as a 1 and 2-day, but let's actually take a look at the 1-day here. So if you, right now, this is actually very bearish on the Dow Jones. You lost the 200 EMA. So the next level of support would be this target 2 at 322.62. Coincidentally, that's very close where the 200 SMA is. And you do have what looks like it's attempting to come back down to test that midline here off of HSI. So MPRSI did test the midline, did break the midline, but I'm looking at the HSI. Should it continue coming down here, you might find support here at target 2, where you would need to bounce off target 2 or the 200 SMA to continue back up to 330 and then eventually 335. For the most bullish case scenario, you break out at 345. But right now, this is a strong push down on the Dow Jones. So definitely keep an eye on the Dow Jones. Jumping over to the dollar here, DXY. So this is very important to look at the dollar and the market, because as of recent, these three things have actually, the bond market and the dollar have actually been showing signs. They're inversing the market, right? So right now, where it's very interesting to see off of this bullish bat pattern on the daily, it's very hard to chart your DXY, especially without volume, but we're going to look at harmonics here, because we did generate a harmonic where you fell below hop and now you're just above hop, right? Since this is a technical analysis channel here, you could potentially see this cup and handle playing out, where maybe this goes, who knows where this handle goes up to, but harmonically speaking here, you are looking to test XA here at 105.79. What can we expect should it continue moving on forward is that the HSI did cross the midline here. So if this crosses the midline, more than likely you could test potentially that 105.79. MPRSI did cross the midline. It's reaching these overbought zones here, the critical overbought zones, but you still have room to the upside. And if you continue pushing specifically on the HSI all the way to these overbought zones, you maybe test the 106 range here where the 200 SMA is, and then down the line, should it continue pushing, you could see target 1 at 108.93, which would be very bearish for the market, but very strong right now after a strong push down. So we will see if that is to continue. I wanted to jump over to the 2-year real quick. So this is something very interesting to note here, specifically because on Friday, Fed's Barkin said that he could see rates go as high as 5.5 to 5.75, which is very bearish for the market. he said that you could envision a scenario where the central bank pushes the U.S. benchmark policy interest rate to that 5.5 through 5.75 range that some in financial markets are now betting that potentially it will or it can. And in this case, be bearish for the market. Um, he also quoted that he's not hoping for that to happen, but he could certainly imagine it. And if that's the case, we are still a little bit far off from 5.5 through 5.75. So today, the 2-year did break out of 5%, and it's currently right now, as of this video, at 5.05, which we haven't seen that in quite some time. If we go over here to the weekly so we could see better when the last time we reached 5%, above 5%. We haven't seen that since, I'll give you exact dates here, when it did cross over, since June 11th of 2007. We are definitely at key levels here. So if this is to continue, I do think that this is going to be bearish for the market. You are about 5% on the 2-year. Definitely new 52-week highs and continuing to push here. Let me see if there is a harmonic here on the 3-day. Give us a better gauge. See, yeah, so the harmonic here on the 2-day, you have a bearish shark pattern where you just broke out a hop, right? It's, like I said, it's very hard to chart these, and this is not suggesting you to chart, but just it's very interesting to see that you're getting these harmonic patterns. You could still continue pushing all the way up here, right? So we'll see if the 5%, we're going to go past 5% and reach those 5.75 interest rates. So definitely keep an eye out on the bond market. I think it was yesterday where the bond market is also inverse of the indices of the market in general. So I do believe yesterday was a perfect example of when the indices were all pushing together to the upside with the bond market, and in some of these situations, because they have been inverse of each other, one of these things could be off and one of them could potentially be lying. And in that case, the market was lying, and that's why you got that push down at the end of the day, where the market just kind of, and excuse my French, but shit the bed. And in this sense, we could have relied on the bond market, especially after the Fed being so hawkish lately and saying that they could see these interest rates go up to 5.5 through 5.75. So very important to keep an eye out on the 2-year. I just want to cover here real quick the 10-year, which also went as high as 4% today, and it is also approaching that 4% right now. As of this video is at 3.99, but you are creating a new harmonic pattern here, I believe, on the 3-day. Or was it okay, give me 1 second here. So on the weekly, you're following this bearish bat pattern where you've been hovering above hop here for quite some time, and now you're looking to break the 4% again. Breaking this, you can maybe see it back here when it went as high as 4.3. So like I said, definitely keep an eye out on the bond market. If the market decides to, oh, here it is, the 1-day. The 1-day bat pattern is calling for target 2 at 4.062. And if it continues pushing, it's expected, since the Fed has been saying that it could reach up to those 5.7% interest rates. So definitely keep an eye out on that. Just jump over to VIX real quick and see what VIX is doing. So VIX did finish as high as 1974 before closing the day at 1960. So if this is to continue, you could potentially see this go up to $21.68 here at terminal and OB. You did bounce off of here HSI to these oversold zones, which is warranted by the HSI arrow. So if this continues, you will have resistance obviously before you get to 21, but this continues, you can see the VIX spike really fast, really hard, especially if we are going to go down in the markets, right? So there's still more data that comes out this week, so keep an eye out on that. Now let's jump over to some of the most important blue chip stocks. I'm not going to make this video too long because I know I'm getting a little bit ahead of myself here, but Apple here on the day, let me remove my drawings, went as high as 154.03, the low being 151.13 before closing the day at 151.60. So harmonically, what do we see here? It looked like it wanted to test target 2 here, but unfortunately fell down, and you're still up below Monday's volume. But if you can continue coming back down here, if I bring up my drawings, the next level of support harmonically would be this $150.09. Should you lose that, you go to 148.05 where that target 1 is. Losing 148, I do believe you can come back down and trade between this range of 140 and 148. And then down the line, come back all the way down to XA. So early to tell, but right now it looks like you're still creating that lower high and then seeing if this consolidates or continues to push to the downside. If you find support here at 150.09, you would want to get above 153.10. Every time you, like I said before, you cross 153.10, you kind of shoot up to the 156.74 range like you did back here. You crossed up, you went 156, you crossed 153.10, you went as high as 155. As you can see just from this area here, when you kind of gapped here, you went all the way up to what was it, 156.30. So every time you get across 153.10, it's bullish for Apple, but you did fall below that. So definitely a key point here is that 150 and the 148 range. Let's jump over to Microsoft here. So Microsoft here on the daily finished the day at 254.15. What we can expect here for Microsoft is it is below target 1 here at 256.12. The next level of support I do have for Microsoft, should it continue down, is at that 248 and then that 242.50 range. Should you lose 242, I think we are coming back down in the market down to 230 and then potentially come all the way down. But we're still too early to tell. It's still early to tell if we're going to continue going that deep. But what does the HSI tell us here? The HSI looks like it's telling that it's curling back down. Potentially, it's still too early. We still need a couple of days to figure out if Microsoft is going to continue down. But just like anything, we have to look at the volume. Volume on this push down has increased, but there's some volatility that has been coming out lately, especially with the data that's coming out this week and especially next week as well. So there may be some consolidation into next week. I do think, if you don't quote me, if I do believe it's PC or CPI that's coming out next week and a bunch of other things. So quad witching and a lot of good stuff, CBOE, but we'll take it one step at a time. Jumping over to Tesla. Let me jump over to the 3-day here. So Tesla did finish the day at 187.71. So what can we expect here on Tesla? There's a lot of volatility here on Tesla. So the next level of support I do have, should it continue coming down here, is at that $177 range. So if you lose that, you come back down to test BC off of this bullish bat pattern. You lose, in my opinion, 164. You can come back down, test the gap fill on the daily at 145. In which case, you can, if you lose that, you go to 127. Fill another gap here at 117, and more capitulation would start if the market decides to go to the downside. Should you find support, should you lose the 187 range here and find support at 177, you would want to come back up to the 190 and then 200 range, potentially then test target 1 here on this 3-day bat pattern at 225. You definitely want to break above 205 to be bullish on Tesla in case it does continue to push to that 225 range here. So the 225, if you can get above 205 and then test 213, I do think 225 is on the table. But the way the market is right now, who knows? Jumping over to, we'll cover Meta here. So Meta, in my opinion, out of the blue chip stocks here, Meta is the one that's holding on pretty strong. I do believe Meta did find its low here when it traded all the way down to $88 and change. What we can expect on Meta here is you you had a golden cross here on the SMAs, and you're about to have a golden cross on the daily here. Potential cup and handle forming. The most recent harmonic pattern, I do believe, is on the 4 hour, if I'm not mistaken, or 2 hour. So on the 2 hour, if you'd lose a 21 EMA here, you could potentially come back down to that 179, which would be a little bit concerning. But I do think the volume from today did pass yesterday's volume, but it's still decreasing. So Meta definitely, I think it's, in my opinion, compared to the other chips, bullish. So if you come up and continue breaking 190, you could potentially see 195 here on off of this bullish crab pattern on the daily for Meta. I know this is past the 30 bars, but we can still use these as levels of support and resistances. So if you break 195, you're very bullish. The reason why bullish on Meta right now, because you are above the 200 and major EMAs here that I follow. So when you're currently above these EMAs here, or the SMAs, it's bullish. So if you cross 195, you could potentially see target 1 here at 251, and then target 2 at 302, should the market continue pushing. So you will see if you do have a big gap here to fill to the downside, which has, as of late, Meta has been respecting. Ever since it gapped up, it has come down close to test it and enter it, but has found support at the top there. So we will see if that is continuing to happen. Jumping over here to the last one I'll cover here, because I don't want to make this video too long. NVIDIA. So NVIDIA, alongside the other semiconductor chip stocks here, very, very volatile and also very bullish, what it looks like. Don't know why, but it's bullish nonetheless. You don't have harmonics here. You have this harmonic pattern that you have yet to do, I guess, a type 1 reaction. It is past the 30 bars, but we can still, like I said, use these as levels of support and resistance. You did have an HSI dot triggered here. Volume, I guess, volume as of this week and last week, it is increasing to the sell side. So what you want to hold on on NVIDIA here is that 224 range. Otherwise, you're going to come back down to 202 and then potentially 197 off of XA. Should you continue holding off, because it's been respecting so far the 9 and the 13 EMA. The last time it touched 21 was here back in February, the 22nd and the 23rd. So you definitely have been finding support here at the 21. So I would be very concerned for NVIDIA if you lose the 21 EMA on the daily. So if it's find support there, you can potentially come back up to from 222 back up to 230. Should you lose that, you go to 203, anywhere between $200 and 203. I do think there is a harmonic on the 4. No, there isn't. But anyways, yeah, that's NVIDIA for you. Not too many things going on right now, except it just because it has been distributed for such a long time. Right now, it's not creating any new M&W formations in the macro, so within the recent macro. So I think that's all I wanted to cover. Yep, I think that's all I want to cover. So I will be streaming tomorrow, same time as always. So if you want to follow me on that, link to my Twitch is in the description box. Also, if you like this type of content, please consider giving me a like and subscribe to the channel. It does help me out. But other than that, I will see you guys tomorrow, and take care everybody, and peace.